Hey guys, Sebastian here. Did you know that the Social Security Administration has this crazy complicated formula that they use to decide how much they're going to give you in Social Security? Well, today I'm going to be going over exactly how the government decides what they're going to give you in Social Security when you're ready to retire. Let's jump right in, guys. All right, guys, so let's talk about how the Social Security system decides on how much they're going to give you when you retire. So the first thing that I think we all need to understand is that there is what's called a 40 quarter minimum. So what does that mean? That means that no matter what, the federal government will require you to have at least 40 quarters under your belt working in the Social Security system, and which equals about 10 years worth of work. So 40 quarters is the equivalency of 10 years. As long as you have contributed into the Social Security system, in other words, you have at least been contributing into the Social Security system for at least 10 years, you will at least get something from your Social Security Administration when you get to your retirement age. But that just means that you're gonna get something.
To that I say, all right, all right, all right.
I've seen Social Security checks of $250 every single month. But again, these are people that probably only completed the 40 quarters, the 10 years, they reported very low income, and this is the reason why they're getting $200 and $300 in Social Security. Then you have other people that are getting $2,500, $3,000 a month from Social Security. And it all has to do with the next formula we're about to jump into. So you see, this is what the government does. What the government will end up doing when you reach your full retirement age, which again, in the previous video, we actually explained what full retirement age is. Now, the majority of the people that are probably watching this video, they will have a full retirement age of age 67. We have an entire video that actually breaks down the different types of full retirement ages. It all depends on the years that you were born and things like that. But what the government ends up doing is as soon as you're ready to retire at age 67, which is the full retirement age for a lot of people right now, what will end up happening is that they're going to grab your 35 highest earning years of your entire career. So highest earning years. So what does that mean? That means that the government will grab, say, what you made back in 1991, 92, 93. They're going to add up everything that you've made during your highest 35 years that you worked under the Social Security Administration. So in other words, if you worked as an employee for 47 years in the Social Security Administration, so say from the time you were 20 years old all the way until you're 67 for 47 years, well, you see, the government doesn't care that you worked for 47 years. They're going to grab the 35 highest years to calculate how much you're going to get in Social Security. Now, for those of you that are probably thinking, but wait a second, I arrived to the United States maybe when I was 45, and I only worked under the Social Security Administration from age 45 until age 67. That means you only worked for 22 years under the Social Security system. That means they're going to grab 22 years, but for the other 13 years, because you didn't complete the 35 years, they're going to use 0 in the formula. So that means that even though you worked for 20-something years, that does not mean that you're going to get the same amount of money than a person that probably worked the 35 years under the Social Security Administration.
Now that makes sense.
So this is what they're going to end up doing. They're going to end up grabbing all of the money that you earned in your entire 35 highest earning years. You're going to have some years that you made $50,000 a year. You're going to have some years that you maybe made $75,000 a year. You're going to have some years that you made $100,000 a year. And let's say throughout your entire career, you actually ended up making, call it $2 million. So you see, what the government's going to do is they're going to grab these $2 million and they're going to divide that by 420. The reason they do it over 420 is because there are 420 months in 35 years. So once they grab the $2 million and they divide it by 420 months, that will equal something called average indexed monthly earnings. I know it sounds very technical, but in simple words, this is the average income that you made over those 420 months. And that will give us $4,761 every single month. That means your average income per month over that the 35 highest earning years was $4,761. Then what the government is going to now do is they're going to now grab this number, the 4,761, and they're going to now throw that number into some crazy formula, which gets a lot more technical, And this crazy formula is going to end up spitting out the amount of money that you're going to get for your Social Security when you turn full retirement age. And that is what the government does to calculate your check. They are going to grab the 35 highest earning years to figure out how much money you're going to get at your full retirement age. So don't think that all you have to do is get 10 years. And if you get to the 10-year mark or the 40 quarters, then you're safe to go. You're going to get a good amount from Social Security. That is absolutely not true. They will grab the 35 highest earning years, and if you only reported 10 years in the system or 40 quarters, that is the reason why you will end up getting a very small Social Security check. Now, please do not grab this information and then assume that now you want to start reporting all of your income as salary. This is the reason why you need to go make sure that you're speaking to your tax advisors, to your financial advisors, so that they can help you decide how much you should be reporting as far as Social Security based on your salaries that you're paying yourself. So don't assume that because you're a business owner and maybe you're making $200,000, $300,000, $400,000 a year, that now you're going to end up paying yourself a salary of $300,000. Sometimes that won't be actually a good idea from a tax perspective. So just make sure that you're going and speaking to your advisors, you're speaking to your tax advisors, your financial advisors, your retirement planning advisors, so that they're helping you make the right decision as far as how much you should be reporting on your income tax for Social Security purposes. Yes, we want a good check when we retire, but what we don't want is we don't want to end up paying the IRS, $200,000, $300,000, $400,000, $500,000 in Social Security to get just a couple $100 more. So just make sure you're speaking to your advisors so you're making the right decision when it comes to how much you're reporting on your Social Security statement every single year.
Oh, didn't see you there. Thanks for watching, and we'll see you next time.